Okay, great. So then I guess we can start. Is everybody ready?
Absolutely.
Great. So welcome to the Actuarial Technology Summit 2025. This is a session on becoming a fintech CEO and how we went from technical professionals to business leaders. I would like to thank you, our live audience here at Purdue University, and I would like to thank organizers of this conference for putting this wonderful event together. With that, we will start with our introductions. My name is Igor Nikitin. I'm co-founder and CEO of Nice Technologies. We are an AI-assisted actuarial modeling platform for PRT and longevity reinsurance. Prior to co-founding Nice Technologies, I held diverse positions at Prudential Financial and Pacific Life. And my professional background is a mix of software engineer and actuary. Kevin?
Yeah, so my name's Kevin Pledge. I've started several companies. The most current run really dates back about 6 years, but kind of took a new direction about 2 years ago. Um, I really started this in around 2000 with my first real startup. Although when I was at school, like age 13, I did start a business selling my old toys and stuff. And that became instead of selling them, no, lending them out for a fee, and that became an official toy library, and it's still going. So it's still and actually employing people. So that was probably my first entrepreneurial move, but realistically around 2000 when I started a data warehousing company. That's it.
Lee?
Hi, everyone. My name is Sisha. I currently lead a startup that trying to disrupt the traditional insurance model by using behavioral and dietary data to create personalized and preventative solution. Before joining the startup, I have 20 years of experience across Asia and Canada in different insurance companies and bank assurers as well. And my main focus when I was an actuary was really on product development um, and product innovation and really challenging the conventional solutions. And I look forward to this session. Thank you for having me here.
It was a very interesting and unusual approach to the problem, but it sounds very interesting. So let's start with this session is organized as a set of kind of topics that we will discuss from our different perspectives and our different levels of experience with entrepreneurship. And the first topic that we will talk about is motivation. So, how did you start your journey, and why did you decide to leave your corporate job and start a company? So, Kevin, would you like to start on that?
Oh, sure. Um, yeah, so as I said, I left my so-called secure job in 2000 to start my first company. And I guess when I say secure, I guess that was one of the motivations because I don't think you're ever really secure in your job. You could be some decision could be made outside of your control, and then for example, pull out of a country, close down a line of business. And I saw some good people being let go when we had a reorg, and I thought that's not something I want to have happen to me. So I thought I enjoyed what I was doing. I wanted to build. I built a data warehouse at the company, and I wanted to continue doing that. So I enjoyed that sort of project building work. So um, that's why I made the decision to make a jump. There was nothing. I didn't get a good offer to continue doing another project. So once it finished at the company I was at, I had an offer to go build it somewhere else. So that's what I did.
I
Who's
see.
next? See?
Sure, I go next. So this is my first startup journey. And honestly, joining this journey is more out of frustrations. I spent really years watching two parallel universe, right? I've been working in a traditional insurance for many years and really kind of seeing how we're really using outdated models to manage our kind of modern day health crisis. And on the other hand, my husband has been like in the startup like for since 2013. So I've been watching like the other side of the world at looking at a lot of the tech ecosystem building really sleek solutions, but they didn't really fit into the real world of insurance underwritings or regulation. And I've been to a lot of when I was with big companies. I've been to a lot of startup pitches. I work with plug and play, and I just kind of trying to get to work with the startups. But it's this kind of big disconnect between big organization and startups. It's not just inefficient. It's also quite painful, right? It's really like the real people get stuck in the middle that we don't have a good solutions for them. So really last year I had the opportunity to join Reimagine Risk and just really to create a new kind of company that can speak both language and then we can move the needle. So I guess kind of when you're passionate enough about solving a particular problem that you want to do something about it.
So wait a minute
For me,
before we move on, I just want to go back on that because I guess one question is perceived risk, and I guess that's what I was getting at is like people feel oh, it's risky when you start your own business, but see your husband is also involved with startups, so that feels like double risk, right? If one of you's got a secure traditional job, that doesn't, you feel you have that to fall back on. You feel that you build something, you can control your own destiny. Does that not feel a bit risky? Did you think about that or?
Oh, yes, absolutely. So what happened is that he went back to take a corporate job while I've been on the startup journey. So at least we have a stable cash flow
Mm,
to keep us afloat. You're absolutely right. I don't think being because we are both actuaries. So being both actuaries, I don't think we take that risk of being both at a startup.
right. Igor, I guess back to you.
so for me, this is a second startup. The first one I joined out of curiosity because a person approached me and they needed somebody who knows kind of actuarial world and technology world. And I was more curious than anything else, and that's how I ended up joining that venture. The second venture, it was more by discovering that there are unsolved problems in the work that I do day to day on pricing of PRT and LRT. And so, out of kind of those frustrations and some of the ideas that were kind of tested out and developed a little bit, that's how this second venture came about. There's certainly a lot of things I learned in the first venture that made the second one possible, and we will share that later in this presentation as well. So the next topic that we have is the challenges. What part has been the hardest in starting a company? And see, would you like to start on that?
Yeah, sure. So as the newest member to the startup game on this panel and with a company just a few years young, my struggle is probably the most relevant for those in the early stage trenches, right? So I see this problem in two perspectives. One is the hardest part for from a company's perspective, it's really to search for product market fit. I mean, any investor will tell you it's not about having brilliant ideas. It's about finding the right use case that someone is willing to pay for. This means we have to stay flexible and resilient. I have to learn to treat every pitch not just a sales call, but it's really more like a life focus group, right? Every no, every rejection is a data point. So it might be the price, the integration, the perceived risk, and more, and we have to pivot our offering, our messaging, and even our target customers based on the real world feedback. It's really a challenging and iterative process of building, listening, and adjusting. And from a personal perspective, the hardest part, I think, for me so far is the mindset shift, right? As an actuary, my value of is being right. My work is a chain of validated logic. But being as CEO of a startup, I'm almost never sure of any decision I make, right? With very often we come with incomplete information and we have to carry the weight of the decision. So the real work for me is learn to be comfortable of being uncomfortable and being in that permanent state of calculated uncertainties.
I would agree with a lot of what C said. There is never enough information to make perfect decision, and and making decisions when you don't have all the perfect information is something that I personally struggled with because as a mathematically and programming inclined person, there must be a right answer somewhere, right? Um, the other aspect I would say is learning. Disciplines that are not very native to your skill set. So for me, it was things like marketing and sales and fundraising. Those were not the things that I've learned and been trained on as an actuary or as a software engineer. And so that's been a lot of being uncomfortable and exploring the boundaries. So very similar experience to see.
Well, I'm going to have a different opinion here.
Kevin?
So I I I agree with what you're saying, but for me, the fact you're making decisions with incomplete data is something that's happening anyway. It's something that you um, that would happen if you're doing a project within a company. The only difference is that you have the when it's your own business, it's your own destiny. You're the one that's going to live with the outcome. You're not going to have someone over your shoulder saying, "Well, why did you do that?" Get a sign off from somebody else. So um, I'm fairly comfortable making decisions with incomplete data, and I think not having someone looking over my shoulder was actually quite a nice part. And for me, the hardest one of the challenges is actually going back to what C said is pivoting on feedback. Well, I don't really that was a challenge because I don't want to take feedback and then build a product that is based on a lot of other people's opinions. And for myself, I want to build a product that is what I believe in. I don't want to cut something that I believe in and then find it doesn't work. So if I build what I believe in and it doesn't work, then I can live with that. But listening to other people is challenging. The other challenge that I have, so going on what I was going to mention is finding time to put aside time for the things that you don't want to do. The things like cleaning up your code, applying um, updates to things that don't quite need it just yet, completing documentation. Those things are I always find those hard because it just takes up so much time. You want to get in and do what you're doing and get it done. So that's my view. So I don't know if you guys can be persuaded that making decisions on incomplete data is a good thing, but it is. You're mute. See, you're mute.
Yes, I think the we never get complete data, and I agree with you that the key is we have to carry the weight, right? That with this we have ourselves to blame, right? It's really every single decision, particularly high stake decisions, impacts the company and impacts the team, and we have to live with it. I think that is the scary part, particularly for someone who is new to this. And yes, there's no one else to blame, right? Every single decision is like it, it's it's your problem.
Yeah. You live with the consequences and you live with the reward, which is typically not financial, but feeling good about what you've built. So
A slight variant on what Kevin said is, for me at least, it's actually also prioritization, because quite often I would come to the office in the morning and there would be five different urgent things, and I would know that it's impossible for me to do all five. And kind of saying no to things and saying, okay, no, this is not going to happen. I have to cut that. I have to say no to that. I have to say no to this. That is also kind of very challenging sometimes and deciding what should I be focusing on. Mm.
yeah, and that's true. Just like that's true in everyday work when you work within a large organization. But what I see on projects that I work on with large organizations, but people will say, "Oh, I've got to do this now. It doesn't matter that we don't meet the deadline for this other thing." And it's quite infuriating when it's your own project and it's your thing that you're building. You want to hit those deadlines no matter what. You want to push it forward, not be distracted by something that is less important. So.
Um, so next topic is what advice would you give to someone considering starting a company? And I can start on that. So it would be kind of twofold. One, make sure that you are financially in a place to be able to do that. Because things will take longer, and you have to be personally financially secure to be able to do this. And second is make sure that you have co-founders because for a lot of businesses, especially bigger businesses, doing it yourself is not really an option. It's an emotional roller coaster, and you need co-founders that you know how they react under stress. So my personal rule from kind of learning from my first startup is only co-found with people you have worked with because only then you would really know how they react under stress and whether you can really rely on them or not.
So, C, do you have co-founders?
Um, Yeah, sure. Well, I guess my top advice is probably to validate with customers before falling in love with the idea, right? And the first investment should be agree with Igor what he's saying that we need to find the financial stability. We need to have a runway. Um, Money burns through a lot faster than we expected, and it takes a lot longer to build a solution. But the first investment should be finding a real customer, not building the perfect product. So we learned this the hard way. I think we make a classic mistake and a very expensive one. Early on in our journey, we actually spent significant amount of time and money building detailed specs and process and models tailored to the vision of a single promising investor. And really, we put all our eggs into the basket. And when that deal fell through, we were left with a beautifully engineered solution to a problem that we didn't broadly validate it, and we had to really scramble and restart. Um, it's so that kind of really taught us is like we should build the solution for the customers and really look for their customers. Investors, they really looking for to fund the evidence of customer demand. They're not here to define our product. So, and of course, we make a lot of mistakes, and we need to be resilient and getting the support from our family to get back up and get back to the game. I think that's something to consider. Anything else, Kevin, that
Well,
makes you a wealth of experience?
well, I was going to say I don't. I've not had great experience with co-founders because things change over time. Your experiences change, you move on. So, what I'm doing now is I'm working in a distribution project, and I have partners, but the software is all mine. It's all my company, and that software is being distributed by another company, and the distribution channels belongs to that partner. So we're doing a project together, but and it's very much one deliverable. But if things change in the future, if someone says, "Oh, we want to buy this software," well, we know who they're negotiating with for that, or we want to distribute other products, we know where that goes. So as things change, I've that's my view now. Is just be careful with having co-founders. I think having the self-confidence to go ahead and do this yourself and do what you believe in is my personal situation. But I have been there with co-founders. My advice for someone starting it is to first of all, don't do it part-time. If you're doing something part-time, you've got a great idea. Other people will can do it faster and better with more resources. Um, your idea should be something that you can protect. A lot of people think that I've got a great idea. I'm going to build this, and you could spend a year building it, take it to market, and someone copy it in a couple of months. So always be careful whether you're you add unique value that someone else can't copy very quickly and learn from your mistakes as well. And I would say, if you're considering it, give it a couple of years. Plan for, say, 2 years. Quit your job, give it everything you've got. And if after 2 years, set that milestone and say, okay, is it working? Is it not working? Have I done what I wanted to do? And if it's not working, go back and get a regular job. If you wait too long, you won't find that the job market would embrace someone who's been out of the corporate environment for too long. And if it's working, you're moving forward at that point. So I'd say give it a couple of years, but make sure you can afford to give it a couple of years. I think, Igor, you mentioned that. So that's my advice, is give it a couple of years, but be clear, is this working or not? Next point. Next question.
How do you recruit? Especially early on. I think that's a bigger problem.
And I think
Kevin,
you mentioned you use your personal network in terms of co-founders, and that's pretty much where I stand in terms of recruitment. I would use my personal network, people that I know, because I know you can't get it wrong. So you can't afford to. And also the people that you recruit, you've got to like them personally. I think that's important. You can understand mistakes if you like somebody. But if you take it home at the end of the day, someone else has made a mistake and it comes out of your pocket, that can be pretty tough. So you've got to like them, you've got to understand where they're coming from, and be prepared to accept mistakes, and that's the people you want to work with, people that you can accept an occasional mistake from, and but you trust it's not due to incompetence or blindness or something else, some sort of arrogance or something. So personal network is important.
Yeah, I
So
agree with Kevin that it helps a lot with having actually worked with a person and knowing how they work. The other thing with a startup, a lot of people would ask, like, well, is it secure? Is what it is perceived as a lot less stable, and rightly so, comparing to a corporate job. And what I found working really well there is just being very, very honest about it. And kind of the things I tend to promise is, not great pay, long hours, learning a lot, and an epic adventure. And the last 2 points, they're not to be underestimated. A lot of people quit their corporate jobs because they feel that they don't really make the impact that they want to make. And in a startup, you can actually do that because it's a lot more flexible. There's a lot less red tape, and you can do things quicker and do more impactful things.
So Igor, we got a great question in the chat. Let's take that. So what percentage of extra work, because this is very current, what percentage of extra work you wouldn't be doing as an employee are you able to outsource to AI, such as invoicing, tech docs, payroll? And that's a great question. So let me start with that. My view on that is you can outsource an awful lot, but not just to general AI. There's a lot of software out there that you can find. So for example, we have to do training manuals. The old school thinking is you'd have a training department and they would build stuff out, and there'd be a big library to keep up to date. We found a piece of software called Scribe. It just copies along what you're doing. You're paying a subscription for it, but sure, it saves you a ton of work. We could do something better, but we get something good done straight away. So there are tools out there that are now embedding AI and becoming better. But in terms of general use of AI, it's also pretty good to have a first cut at something. It saves you having mediocre interns on your payroll, but you'll get mediocre reports. I had someone give me something just yesterday, and I had to go back to them and say, could you do the work and not ask AI to do it for you? So I think that's something we're all experiencing now, but I think now's a great opportunity for someone doing a startup to say, yes, I can use this AI resource, pay a subscription, and and find the ones you like.
So
Uh,
I agree with
Ego and
Kevin.
yeah.
Yes, I use AI for a lot of the kind of the initial search on okay, what needs to be done. What I do is actually I outsource um all the kind of non-core activities, not just on say tax, payroll, um, taxes, like etc. I also kind of outsource my say UI UX, my web development to kind of I build a team of freelancers to kind of help me to do the work. This gives me the flexibility to scale up and down without the burden of the full-time like costs. And I'm based in Hong Kong right now. So I have the benefit of a kind of good pool of freelancers that with in China and in Asia that can help me to do my development work. And also there are a lot of, like Kevin says, softwares and outsourcing companies can help you to do a lot of the work. So that's kind of how I look at it. But anything that is kind of critical, which is my secret sauce, then I look tap to similar to what Kevin and Igor were saying. I would look to my network and find the experts that we do it in more on a project basis to help me kind of to build the first class solution, but without the first class paycheck. That's kind of what I'm trying to do here.
So when it comes to AI, I would I would say it really depends on a use case. So for example, code development, right? Copilots are quite helpful with that. They won't help with engineering, but they do help a lot with syntax. You can think of them as kind of Stack Overflow that answers exact question you have. I use AI quite a bit for the presentations because the images for this presentation and a lot of my other presentations are AI generated, and my presentations have never looked so good. Um, on the on the more serious use cases, like analytical use cases of AI, I find that for creative writing, like marketing, for example, it is kind of boring. It gives you a lot of writing that is well-known truths, just by the nature of how AI works. But it is not engaging, and the audience usually picks it up right away. So what I do instead, I would actually draft all of the communications myself and then use AI to just fix my grammar. It is indeed very helpful at that. Agentic AI, we have not really. It's not good enough for serious engineering tasks, and so we don't really use it as much as others. Now, the difference there is the use case, right? So if you're building websites, it'll do amazing because there's so much training data on that. But if you're building actuarial software, there is very little training data out there on the internet, and because of that, AI tends to struggle in that arena. So consider your use case, how much training data your model likely had, and based on that, it'll probably advise you on whether it's worthwhile or not.
So one thing that's really cool about starting your own business is you can make these decisions yourself as to what tools you want to use. So I remember being extremely frustrated working for a large company that, oh, we wanted to use some software and and the IT department first had to evaluate it. But of course, this comes with a caveat. Don't use anything that's be careful, privacy issues and all that. So understand what you're doing, but you can actually move a lot quicker. So, oh, this new model from Claude is a better one. Let's use that. This one from ChatGPT is better. Let's use that. Oh, it's better for this. You don't have some sort of corporate oversight, and I absolutely love that, being able to use what I want to use. And before we move on, I just want to share a quick use case that I have because it's kind of a fun hack. I'm in a lot of meetings, and so I record those meetings. I get to transcribe. I have a microphone I wear, and it transcribes it. And I sort of ask AI to summarize the meeting, and that was a bit boring. So now I ask it to summarize the meeting in the form of an article from the Actuary. So it actually writes it quite nice, keeping most of the facts from what was discussed in the meeting, and then it's quite enjoyable to go back and read those meetings down to a couple of pages, and I have the transcription as well. But I found do it in the style of a magazine article made it a lot more interesting to go back and look at something that I'd seen we talked about 6 months ago.
Right. So the next topic is how do you learn the skills you miss? And see, would you like to start?
Yeah, absolutely. So being a relatively new to startup, I am constantly out of my depth. And I think we mentioned quite a lot already. Is I use AI as my always on partner. I have um, I think 8 or 10 AI apps kind of installed on my phone, and I'm trying to play with each one of them. Being and as Kevin mentioned, right, being a startup, we have the freedom of trying out different tools and which one works best. Right now, I use the most is I use DeepSeek for structured problem solving, which is actually very good. You can throw a problem, and it can give you, and it's not just giving the answer. It's actually what's interesting is I will read the thought process, like how you're trying to approach your problem, and then look at the answer. That is actually very, very helpful. And ChatGPT, I mostly use it for, say, creative copywriting tasks, anything from emails to kind of brainstorming for marketing angles. And then we have other tools that can build chatbots and yeah, the latest tools that I'm still yet to test. And for me, it's not about having the AI to do the work, but it just rapidly expose options, and then I can refine my thinking. So that's always been quite helpful, and I'm quite lucky to get into this game at this time that I have more tools. But more importantly, the way to learn, I think, is still tap into human intelligence. For me, what I found quite helpful is kind of once I've identified a knowledge gap, I go to my network. I'm in many group chats and interest groups. Then I will try to kind of arrange for 30-minute chat with like the clear question, right? Say, I want to navigate X, and then based on experience, like what is the one thing or what are the few things that I should be focusing on to avoid, kind of just have the conversation. And people generally are quite generous, and they're willing to speak to me, and those conversation is a lot more valuable than what I can read on a textbook or generate from AI. And but being a two panelists here like Kevin and Nicole, they are great um, source of mentorship that they can kind of help me to navigate as well.
I would expand a little bit on the feedback. So I agree that getting feedback from people who are familiar with the topic is probably the most efficient and most helpful. The challenge that I often run in there is somebody would say, okay, like your marketing is not great, right? And you would say, okay, great. How do I fix it? And that's where a lot of these conversations start to struggle because people would give you like one or two things, but it's not very comprehensive. And what I've learned works really well for me is I would ask, what is the book that you would recommend me to read on that particular topic? Because books are much more comprehensive, much more structured. And that's usually how I approach that kind of feedback and saying, okay, how do I learn it in a structured way? And usually asking for a book recommendation, people would give you something that they have read or something that gives quite a bit of insight into how they're thinking and how to fix the problem, not just identify it. The other point I would add is embrace negative feedback because of all the feedback that we got, I would say that negative feedback was actually far more useful than the positive one. Just make sure that that you consider negative feedback from people who are there to help you, and not just people who just are negative about everything, you know. But yeah.
Yeah, I think the first starting point is to know your boundaries, know what you can and can't do. I think some things are obvious, some things you perhaps don't want to do, and you have to take them on, and then you can go to other people and say, how did you do this? It's often helpful to go to someone who has not someone who's necessarily an expert in that, but someone who comes from your background and has tackled a similar thing. So, for example, Igor mentions marketing. Going to a marketing expert is great, and you can read a great marketing book. But also going to someone who's done a startup before from your sort of technical skill set and talk to them. How did you approach marketing? I think otherwise you can end up being referred to someone, spending a lot of money. And it's just really where skill sets are different. And so someone with your skill set can often point you in the right direction. The other thing I think is it's also important to question the things you think you know. Because you may think you know something, but you don't. Things move on, particularly with technology and security and stuff like that. So you've got to constantly question. Don't feel comfortable that because you've done something in the past that you're an expert on it still, particularly if it's not something that we're attending, CPD site training on. That sort of thing I'm thinking is you've got to keep questioning yourself. Am I the right person to do this? Should we take a slightly different direction with this? So that's my point is know your boundaries and question the things you think you know.
Yeah, absolutely agree with
Oh,
Kevin.
that was,
It's not possible to know everything. And I think we need to decide on when we would like, and going back to like, there's so much to do and it can be very overwhelming. And we need to decide what are the things that we should be focusing on and then delegate or outsource things that we're not good at and finding the team to support us. That's kind of where for me the team will come in. Like if I'm not good at marketing, which I am not, I'm gonna find someone that to help me with it, as opposed to I'm trying to like kill myself and to learn. And rather I would want to embrace what I am good at, as opposed to try to learn something that like I'm just terrible at. It's probably a better use of my time.
oh, that a quick mental hack. Whenever I feel uncomfortable and tired and frustrated doing something, I remind myself that means I'm learning right now. So, hmm.
Yeah, good point.
Next topic is funding. How do you approach funding? Kevin, would you like to start?
Um, I think I've done just about everything. I've given up equity. I've taken fixed interest loans. I funded it myself. So I've done just about everything. I think one thing that's important with funding is to retain control of your product or where you're going. Other people you might not agree with that, but I think that's the most important thing is so whatever you do for funding, you want to keep control of it. You want to do it, as I said before, you want to do something. I'd rather fail doing something that I believe in and then someone else put me under pressure to do it their way or say this is what we should be doing. So yeah, keep in control but I've done everything from equity to fixed interest loans.
So I'll talk about
just say
funding.
one thing I have seen that I've never done is someone who did a competitor of ours did a pitch to we were pitching to a client and they pitched to the same client, but then they came back to the client and said, "We've got no money. Can you invest in us as well?" So that didn't go down too well. So be careful who you ask for money.
So I'll talk a little bit about kind of learning how to fundraise. So I've participated in fundraising for both of my ventures, and first one did not go very well. We did a whole lot of pitches and did not really secure any meaningful funding there. Second one went extremely well because we did 5 pitches and that was it. We got all the funding we needed. So a couple of advice there. One is it is very different mindset from being an actuary because when you pitch, you have like 10 minutes to explain what you do and why should people give you a whole lot of money to build the thing you're building. So it's all about being very concise and very clear. And as an actuary, I had to kind of unlearn going into gory details of things because that is just not the correct approach. And the other practical advice is find somebody who has experience with fundraising because our CFO made all the difference with his research on who to pitch and making sure that the five companies more are very aligned with where we are, what we do, what kind of business we are, so that when we explain what we do, people don't ask like, "What's an actuary?" And that would be the advice.
Yeah, I agree with Igor what he's saying. Getting someone who is experienced with fundraising is helpful. I found so yeah, I kind of tap to a lot of people who have successfully fundraised before and kind of getting them to give me the experience and help me to kind of like how do I approach it, right? Being new to the game. And my approach has actually evolved over the last kind of 10 15 months. So early on, kind of, I make the mistake of thinking like money is money. So quite similar to what Igor was saying that I'll pitch to anyone that who will listen. It was very exhausting, inefficient, and not very successful. And now kind of I look more for synergy. For instance, we are now in talks with a fund that owns a portfolio of hospitals and health clinics, and our solutions complements their existing assets, and we bring the insurance know-how that they lack. So this makes the partnership more than a transaction, and it's more like a multiplier. So um, that it makes the conversation a lot more meaningful and it helps us really closing the gap. So it's no longer just a 5 10 minute pitch that I say yes and no, right? And we're talking more about the long-term collaboration here. It's so it makes the conversation a lot more meaningful for us. And also in the investor conversation, I'll try also be quite transparent with kind of where we are and where we're going and just be very clear like what we need to get there. Um, and that's something that need to a lot of practice how to keep the pitch sharp, how to kind of get their attention and make it absolutely clear like being actuaries. I mean, we we very often like comfortable talking about complicated scenarios and use a lot of the jargons, but the it's important to keep it very, very simple. If like the test is that if a 5 year old cannot understand what I'm saying, I need to go back and refine it. That's kind of how I'm approaching it right now.
One resource that I found very practical in learning how to fundraise is actually Y Combinator video on YouTube. They talk about the pitch of Airbnb, and that had a whole lot of kind of aha moments for me of like, oh, I'm totally doing that wrong and I'm doing this wrong. And now I finally understand why am I doing it wrong. That was very helpful. Right. So next topic is lessons. Is there anything you would do differently? Kevin, would you like to start?
Um, oh, I'd like to say no at a macro level, but at a micro level, I say make sure you have shareholders agreements in place. If you do have partners and shareholders, I wouldn't even a templated one's good because I said things change as you move forward. I personally wouldn't go 50-50 again. You want to know, if things you go in a different direction, who's going to stay, who's going to move aside. So shareholder agreements and shareholding percentages is something that I've learnt you want to do, right? So that was the big one for me. See, where are you with things?
Well, so I'm learning every day. I think you touched on this earlier, Igor, on the prioritization. So if I would do anything differently, is having more discipline about focus, right? And I, well, in a startup, everything feels urgent. It's very easy to get very overwhelmed. What I found is more effective is identifying the one single most important thing each week, and then make sure that I get it done, as opposed to try to work on 10 things, but nothing gets done, right? For me, um, it's it's learning how to say, okay, not now, maybe later, so I can kind of say yes to more important things. And discipline is hard, but this is what I try to do, and I continue to practice. Um, the other one that might do a bit differently is trust my instincts a bit more. Um, it just being new to this game a lot of times is like I'm kind of uncertain, right? It's very different from Kevin being a multiple time entrepreneur that you probably have all seen this, but being a first timer, um a lot of the situations, whether it's meeting with investors or kind of try to pitch to clients, are kind of new to me, and trying to be perfect and trying to kind of rely on the data as opposed to trust my instincts. I think that is something that I need to learn, and trust more on, okay, this is how I think I will approach, and just go with the gut feeling a lot. Probably go with my gut feeling more. That's very
But
non-actuarial,
you
being
do
very
that.
a
You do
non-actuary.
that.
So for me, in my current venture, it is too early for me to say what I would do differently because I think so far it's working quite well. But there's a whole lot of things that I've learned from my first venture and applied to my second one in kind of this bucket of, okay, that didn't work. One would be resonating with Kevin's earlier point. You have to go full time. It's not a part-time thing, and it's not only that you're slow, it's also that your customers and your investors will not take you seriously if you're doing something big part-time. The second point would be actually resonating with what C said earlier is doing market research. We've done a whole lot of market research before we even considered starting a company for this venture, and that helped a lot because you already knew who wants what are the expectations, and there were quite a lot of changes that kind of the product underwent even before the company was started, even before people kind of before the company was formed. And the last thing I would say is, yes, absolutely make sure that from legal perspective, you have your agreements and you have everything kind of on paper and written down, and it is not ambiguous, so that when things change, it's very clear what was promised and how.
I think one thing is that if it's successful, you look back and you think, oh, we did everything right, even if you didn't. Um, and I remember one of the presentations, my favorite presentation I saw at an SOA meeting was Nazir Villani and Michael Bernstein, I think. If I've got his name wrong, just someone put it in the chat, please, if you were there. They basically said, how do you go about being a startup? And Michael said, do everything cheap. Don't get an office. Just do everything as cheap as you can. Save all the money you can. Do it on a shoestring, whatever you can do. Nazir was the complete opposite. His argument was get it right, put the foundation in, spend the money now. You're going to you're going to thank yourself later. And both are right, and both have been successful. So sometimes I wonder, um, whether there is a right or wrong approach on some things. But,
I would add to that is in a lot of conversations with customers and fundraising, like investors, um, I find that being authentic is most important. So it's not really that you have a script or that it's perfect script. It's more just talking to people and being yourself. To Kevin's point, there are many paths to success, and you just have to find the path that aligns with you and how you think, how you work, how your organization operates. There's definitely not a one template that works for everybody.
I agree. I think it's really situational, right? Depending on the situation where you are, and like an example would be like depending on like on the fundraising side, like who you are talking to, kind of where their buyers, where they're coming from, they have a different angle. So there isn't kind of one approach or one pitch is gonna work for all of them. So it's I absolutely agree with Kevin that there's no magic formula. The flexibility for me is being flexible. Whether we can pivot, whether we can be flexible, depending on my dad is an entrepreneur as well, and he often said is being a startup, so being new to the company, is not about you defining the company or defining the role. It's depending on who you meet, and that defines the company, defines the role. So that is a very different mindset, and I'm start to appreciate that. I'm sure kind of going back to earlier on about hiring. I know we all try to hire the good people. We try to kind of get the best people, but very often is kind of who are the people that we can meet and we met at the time, and how we can incorporate the people into within the organization, how we can best leverage their skill sets, and that kind of defines the way kind of we work, as opposed to say, hey, this is how I want it to work, and this is my way, right? So that's kind of another kind of lesson. Um, I want to share.
So Igor, last slide. I see we've got about 7 minutes. The last slide is any other questions. I don't see anything in the chat. We had a good one earlier, but I have a question, so I'm going to jump in and give my question if that's okay with you. C was saying about pivoting earlier, and how do you know when to pivot? How do you know how do you take the signal from the noise? So about a few years ago, I was, a lot of people were saying to me, or maybe 5 years ago, oh, it's use the blockchain, do everything on the blockchain, it'll be so much better. Maybe it's because I just didn't understand it properly, but it was, why would I do that? I don't see the benefit. And now the everything's about generative AI, about LLMs. And it's like, wow, yes, we're dropping everything to incorporate LLMs wherever we can, and having iterations on that. So how did, I guess, Sia and Igor, when did you pivot? And you mentioned a pivot. How did you know that was the right thing to do?
Okay, I can start. I think going back to earlier what I said, it's one is be clear about what the solution, what the problem I'm trying to solve, and then it's whether anyone is willing to pay for the use case that I'm proposing. So if I've been trying to kind of get clients and no one is willing to pay for it, and that's a good sign for pivoting. The other part of pivoting is finding a use case that someone is willing to pay for. If someone's willing to pay for it, I go for it. So I'm a bit more pragmatic, particularly early on in the startup. I don't think I get to say, okay, here is a strategic direction and I want to do it this way. For me, it's getting the clients and getting getting the money. It's kind of where helped me to decide.
So for us, it's not so much pivot in a traditional sense, but it's more prioritization of development pipeline based on the feedback that we receive from the market. So there was, for example, one feature that was requested by several people, and we were like, oh, okay, so that's clearly top of mind for the market, so we should build that, we should prioritize that. Yeah,
How
so
do you how do you
we
how do you
haven't really
how do you
done.
so Igor, how do you get the feedback in the first place? Do you just listen to it one on one, or people call
Oh
you?
yeah,
Because
we
sometimes
meet
it's hard to.
with even before we started the company, we went out and we talked to our potential customers because having worked in PRT LRT business, you actually know a lot of people. And so even before companies started, you just go and you say, hey, if this thing existed, do you think it would be good? And if not, then why not? And how would it be different? So you learn quite a bit from that. And what I've learned is that asking for advice is usually very well received, and people are usually very cooperative on that and very helpful. It's even as much as just reaching out on LinkedIn to people in certain areas of expertise or certain roles and asking, can we just meet for 20 minutes and I would like to get your ideas on a few things. I find that that works quite well.
One thing that we've just done is we have a user website that they can log into, and we put a suggest a feature and vote on the features that have been suggested, and that way we can see the votes, sort of see that data. We're not just hearing from the noisiest person, the person who wants to speak up and say, "Oh, this is so important to me. If you don't do this, you're going to lose my business." It's we want to hear everybody's vote and see. I put a feature in that someone was making a big noise about, and nobody voted for it, and other things get voted up. So I found putting a user website out there and getting votes on things was useful, but still early days for that.
Maybe one quick question
That's an
to Kevin.
excellent idea.
Yeah, that's a very creative approach. So how do you get traffic into that website, or how do you get like people who vote are interested in the solution?
So we do it as part of the onboarding. So we built the website to start marketing a product. Then we added the user login, and we started putting information in there because we I didn't want to do the training as to what is the product, what does it do. Then I don't want to do the onboarding. I do the first few and it gets repetitive. So we'll put videos on there. And then after we find people are starting to use that to come back and they get their commission terms, they can get the product features. We added let's do a vote for new features. So we just added it on there. So we have people already using it. And more general, as I said, we have I'm doing the development, so I'm not really getting involved in the marketing, but the distribution side, they have people that know to do marketing, so they're putting stuff on LinkedIn. They put it. We have a corporate post they do, so they're putting stuff all the time to get traction, LinkedIn, Facebook, and stuff like that. So we're getting we have someone that does that, but it's a partner that does that, not me. I know my boundaries there.
I would add one more thing on pivoting is it is helpful to stay flexible in your thinking, and sometimes people will come and ask for something that's not quite what you do. I would advise instead of just saying something like, "Oh no, that's not what we do." Give it a bit of time and a bit of thought, because some of the interests in partnerships that we've done, they were not exactly what we do, but they ended up being very productive and very successful by just saying, "Oh, it's kind of tangential to what we do, and if we structure it maybe a little bit different, it could be mutually beneficial." Now, whenever we do that, one thing that we ask ourselves is, does it advance our core mission, right? And so if it does, and it is possible to structure it in a way that it does, then we would say yes. But if it is something that is completely unaligned with it, then that would probably be a no. I would just kind of advise thinking more creatively and thinking whether just restructuring some engagement could actually make it worthwhile in terms of advancing the mission of your company.
Yeah. So we just had one last question. We're just out of time, so let's just answer this one quickly. Do you want to take all your money up front or from the get-go, or do you want one where you slowly inject capital as one grows? And I personally, I've seen companies take a huge injection. One of our competitors took $20 million and they spent it all on marketing and it was unsuccessful, and then they had to be acquired. So I think you can overspend. We saw a lot of that, pre-COVID with startups. But the arrangement I have now is sort of money coming in each month that sort of pays the bills. We have targets, and it's renegotiated every 3 months. So, and I like that. I like that at the start of the 3 month period, not so much at the end of the end of the quarter, when it's going to be renegotiated and discussed. But the minute I hear, yeah, this is we're good, we're meeting the targets, we've done what we need to do. It feels a lot of relief, and but yeah, I think take the money as you need it. Don't take more than you need.
Yeah, I agree with
I would say
Kevin.
that, yeah, go ahead.
Yeah, I agree with Kevin. So also depending on the runway of the lineup or potential customers. So if you have the kind of a demand that you need to put in the capital so that you can quickly scale up, take the money, like let it scale up, right? But if you are in a phase where okay, I need the money to kind of pay the bills and then we have a steady target, then kind of do it slowly. So I think it's a situational.
Yeah, I think either approach could work. If you want to raise a lot upfront, you would have to have a team that investors would actually invest in. That could be quite challenging to a lot of people. But in general, raise as you go would be my preference because every subsequent round comes with better terms because you're further along in in the advancement of your company.
And the other thing with investors is it's very easy to find investors when you don't need the money. It's pretty hard to find them when you really do need the money. That's the thing you always need to remember. So I think we're out of time.
All right. Yes. Thank you, everyone. I hope you enjoyed this session. Mhm.
Okay.
Thank you,
Thanks.
everyone.
Thanks, everyone.
Right. Bye. Mhm.
Thank you all so
Thank
much
you.
for
Bye-bye.
presenting. Really appreciate it.